Welcome back to Crown's Crypto Cave and another little weekly Sunday morning wrap up as you get ready to prepare to go pray to your Lord and Savior Goat Jesus over here. But no, right here, right now, we have some very serious magic internet money business. So it's back to the cave. All right, and I've actually really been enjoying doing these weekly wrap ups. But first things first, before I even forget, I do want to remind everyone and also remind myself that I will be running a sale for $500 off of my technical analysis program starting Wednesday for 1 week. So I just wanted to get that out there right now, just in case if anyone was wondering and was considering, hey, just hold off for a few days. It's going to be a lot cheaper. There you go. All right. So on to the analysis. Over here, we have the weekly. The weekly is what I want to be most aware of, as it is the highest time frame closing the soonest in a way. Of course, you have to wait a whole week until we get a new one. So I always want to be aware of what is it likely to look like and what is that likely to imply as time moves forward, as time typically does. And over here, the way that it's currently situated is kind of inconclusive in my opinion. However, there could be a lot of major happenings in the next 12, 14 hours, whenever 8 p.m. Eastern Standard Time is when that weekly closes, that would make me be a little bit more aggressive in my own trading activities. I'll put it that way. So the way that it looks right now, again, very inconclusive. However, you can imagine if we do start selling down, if we do close this weekly, and I'm making assumptions here, around the 6,500 mark. Of course, anything below the 6,500 mark would be quite damning indeed. But anywhere around 6,500, to me, would look like a rejection off of this green 55 exponential right here. On its own, that's not a huge deal. But the fact that this yellow 21 exponential and this green 55 exponential are getting so ever so close together is telling me that if they were to flip, and if we are actually respecting it as a resistance, if the big bad bots and algos of the world are using that as as kind of like their selling tool, so to say. It's probably like the wrong way to really talk about it, but I was struggling for words there. Then that to me would be indicative that we're getting ready to actually flip those exponential moving averages. And what I mean by that is the yellow 21 exponential to the downside of the green 55 exponential, and that would produce some very, very, very aggressive algorithmic selling, I would imagine, as the only other time we've ever had this cross in Bitcoin's almost 10-year history was right over here, funnily enough, 2014. In fact, if we go to the BLX index, we can go even further back. And yes, we actually did. No, we did not cross it over here in 2011. Funnily enough, yep, never even. Yep. So this is the only time that's ever happened in Bitcoin's almost 10-year history. Very similar price action. Now, of course, there's some discrepancies because again, when you're looking at historical analysis, you can't go one candle to one candle. That's not how it works. I think it's very disingenuous when analysts say that or relate things like that. They're like, this is a fractal and we're going to be going here because of it. It's like, well, hold on. There's a lot more to it. So maybe it's a little bit naive thinking, maybe not disingenuous. I try to think that people don't deliberately mislead others. But the important thing here is, besides my moral virtue signaling, is that this is the only other time you've ever had this crossover here. Very similar posturing of these exponentials and price action. Yes, there's discrepancies, of course, but again, you can't analyze this one-to-one. This is where the art of technical analysis comes in. And why I'm so concerned with these exponentials is the algorithmic interpretation of them. So if they were to cross to the downside, that just tells me that the bossy algos, they're just getting one step more aggressive, one step more bearish. So that would be the more bearish view on the weekly. Of course, we're gonna have to wait until the actual weekly closes. So back on over here to Stamp, a little bit different than that BLX index, as it's as that one's a little bit of a lagging chart actually. Anyways, you'd imagine by the same token, if you do take a next step up, if you do close, well above 6,650 to 6,700, it will look like this guy has a little bit more of a body on him and be a little bit more respectful. However, when I was looking at these charts earlier this week, going off the daily, and essentially looking at the early breakout we had over about 6,600, which we'll go over in just a few moments. What I really wanted to see was some immediate follow through on heavy volume. That's what I need to see to be convinced of a breakout. And as you can see right here, right now, we have a very low volume inconsequential guy right here. Following up, a hammer daily right here. So again, this guy is actually on low volume as well. So if I were looking for a big macro reversal, I want to see at least big volume on the actual reversal candle right here, which would be this guy right here, which is actually below our volume moving average. And then this guy has some follow through, which this one does have follow through. However, the low volume on both of them makes me less convinced of it. So again, whenever we're talking about technical analysis, we're talking about statistical setups and probabilities, and this to me is more indicative of perhaps a fake out in the making. Now, of course, yes, we do have plenty of hours until the daily close and also the weekly close, so a lot of things can happen, but it will be difficult to undo 6 days, 6+ days of the week in just a few hours, essentially. But it can be done. We've all seen weirder things happen. Anyways, let's go down over here to the daily. And I want to really be going over both cases. So over here on the daily, we have, if I'm going to present the bullish case first, we do have a decent bullish case. However, I will be revealing pretty damn soon that I actually do lean a little bit bearish here. I'm probably just going to be called a perma bear for this. But God damn it, I'm going to tell you guys, there's going to be one point in time where I do say, hey, I think the bottom's in. I think it's time to get rolling. So the bullish case here is, hey, you took out your yellow 21 exponential right here. If I put on my trend lines over here, we had a very obvious breakout above this level, which again did coincide with your yellow 21 exponential, and you close a nice thick one above it and have a little bit of follow through over here, and we're just coming back down to retest it. Classic play, just rebuy the retest. That's one of the most classic plays in the book. If I can show you the last time that we really had one of these entries was right over here, and we actually did identify this on stream, and it was a great trade. As your first one closes above it, your second one comes back down, tests it. They say, okay, yes, we're on the same page. And then what do you get over here? You get a $400 move right in your face. Now, yes, you do end up breaking it downwards over here. However, at the end of the day, I'm not suggesting that it's going to produce a full-on reversal just from that alone. I just like the actual trade setup for a shorter-term trade. Could it produce a full-on reversal? Certainly, it certainly could. However, again, to go over the more bullish case, I'm going to go over here to the 3-day and kind of plot out what I believe the bulls would be thinking over here. So I'm going to have to put myself in the shoes of the bulls. What are you thinking, bulls, you damn bullies? And we got some like this on the 3-day chart. We have a falling wedge. Now, my least favorite pattern to trade at for like out of them all, like quite literally all of them, all wedges of all types. I don't even want to consider them, but you know what? It's worth talking about because yes, they do have some validity. It's just in my experience, a lot of fake outs occur on these sorts of falling wedge breakouts or breakdowns from a rising wedge, any type of wedge. I hate them all. I'm a wedge racist. Where is this video going? Nobody knows. Anyways, okay, so over here, we would have a nice horizontal right there. So I actually do like this, how it does agree with this point that we kind of rejected from last time. However, I just want to quickly go over one of the reasons why I really don't like to trade falling wedges, because 3 to 4 weeks ago, we actually the right way to be drawing this was like this, going body to body over here and over here, and we actually did break this up over here and got stonewalled right here at the horizontal. So this is why I put a lot more weight on horizontals rather than diagonal trend lines. They just seem to be more profitable in my experience. But hey, if it's been working for you, to each their own. Anyways, the other reason why I don't like them is because, hey, this is actually completely fine that you just go, I'll just redraw it. And this one actually does look a lot more, quote unquote, right, because it does line up with a lot more things. So I like that. By the same token, you can imagine that, hey, if we are in a falling wedge, well, this is typically a bullish continuation pattern, could you call it a bullish continuation, bullish reversal, whatever you want to call it. It typically gets resolved to the upside is what I'm trying to relate over here. And you can see that, yes, we did close this 3-day guy over here above this horizontal area at about 50-ish area, which again was your daily 21 exponential. So those things would be in the courts of the bull. However, if we go over here to to incorporate some more for the bulls over here, give them their due credence, you'd be saying over here, well, hey, looking at the CMEs, you do have a couple of gaps in price action. It looks like we did fill this one, and the first pass was a sell down. This is one of those just classic plays again, just very, very consistent in the way that it plays out. Not always, of course, not everything is always going to work out, but this one certainly did. And if you did sell this first pass, well, I'm going to guess that you're pretty happy, all the way from 6,800 down to 6,250. Not bad, not bad at all. Anyways, you do have this other gap in price action over here, and if you're not familiar with gaps, or you don't come from the traditional stock market world, or bonds, or just anything that has opens and closes really, and you only know cryptocurrencies as a 24/7 market, well, when you do have open and closes, you do get these gaps in price action, and one of the classic plays is to kind of sell it when it comes back into it. Now, the other thing to mention about these things is that actually, in my experience, pretty much all gaps get filled at some point in time. However, that doesn't mean it's getting filled anytime soon. Exhibit A over here. We have a major gap in price action over here from 76.50 all the way down to about 71.50. And I remember this was a huge deal. You had Parabol Travel on the Twitter saying, hey guys, we got a gap over here. Don't worry about this downwards movement right now. It's just $500. We're going to be going back in no time. And you know what? Maybe we just have some differences in time perception, but it took about a month and a half to 2 months to really actually fill this guy over here. But hey, it does get filled. So my point with this is that if you are, looking for this over here, technically speaking, the statistics are certainly on your side, but the time spent in between, maybe not. So again, going back over here to my Finex chart, what else can we find for the bulls? Well, we can say this. Hey, you had a great reaction off your 200 simple moving average down here on the 3-day chart. This red line right here, very, very nice. The bulls have defended the purple 200 exponential once again, and as long as those are essentially valid, you're good to go. As we do tick down right now. Anyways, so that's pretty much it for the bulls. If I do want to give them their due credence, that's what I'd be saying. Do you have any sort of measure moves to be made off this over here? I've seen some people call this cup and handle. It's not a cup and handle. For first things first, you don't want it to retrace this much into your cupish formation. You want like maybe half at most of your cup. And way more importantly, you need a cup and handle is a continuation pattern. So in this case, you'd want it to be coming after an uptrend, not necessarily a major $2,000 downtrend, which took Bitcoin down, I don't know what, 20 or 30%, pretty damn fast. Anyways, okay, so that's it for the bulls. Let's go over the bearish case, and this is the one that I'm actually leaning a little bit more towards the more that I think about it over here. So I'm going to redo my chart. I'm going to go down over here into the lower time frames and say, hey, Crown, that was a total fake out that we had the other night. And what do we have over here? We have a rising wedge, actually. Again, wedge is my least favorite pattern to play, but when it fits my biases, I'm down with it. No, of course not. I don't want to represent it like that. But the thing with what I like about this guy right here is that it actually does have your traditional 3 touches on the bottom, 3 touches on the top. So by all intents and definitions, this is a rising wedge. And what's most convincing me is that we are respecting this up resistance very, very well. What's also convincing to me, and this can be interpreted as a bullish or a bearish thing, but I'm going to give both twists on it. We have about 35,000 open shorts over here on Finex, which historically speaking is incredibly high. As you can see, there's only one other time in history that we have data for where shorts got above that 40,000 mark, and over here we actually just barely got there at around 39,000 and some odd number. So that's, it's too many people in the bus syndrome essentially. And when everyone's saying the same thing, typically the opposite happens. Now, this is a little bit dirty and a little bit incomplete, and the reason why I'll say that is because if I go over here to my good old data mesh, you can see that most of these shorts or a good amount of these shorts are hedged. In fact, we have data on Finex, just Finex alone. And remember, people are on multiple exchanges hedging between different things, and especially when Finex, dries up on their margin funding, they will go to other exchanges, which we do not have data for. And you can see over here that we have about 5.8 thousand shorts hedged. So that means we really only have about 29.8 thousand shorts really open. So why is that even relevant? Well, funny you mentioned that. Because if we go over here to the longs data, look at this. We have about 29,000 open longs. We got actually 29,500 this morning. It looks like some people are letting go of their positions. But essentially, they're on par. They're even right here at a major pivot in the market, in my opinion. So I think that is neither a bullish nor bearish interpretation of this. I think that you have to be neutral on this and say, let's just let the price action kind of dictate to it. I don't believe that the people who are aggressively calling for a short squeeze, guys, there's too many shorts. We have to get rid of them because that's just the way that it goes. It's like, well, it doesn't look like that to me right now. In fact, if we go back on over here to the shorts, we do know that a lot of these people were getting short right around here, right around the 20th of August at 2300 my time. I am in Helsinki time, so if you are trying to recreate this yourself, definitely adjust for your time. 22nd of August around 2300, or sorry, the 20th of August around 2300, which was right around here, right around this guy right here. So they have an average price somewhere around 6450 to 6500, we'll call it, and there's a significant amount underwater. But they're holding on to their positions. So that tells me that bears actually are playing this guy right here. They're probably going to let go of these if we do start taking out 6800. And what I mean by taking out 6,800 is what I mean is like a 4-hour close, especially a daily close above there would be pretty damn convincing. You'd have to de-risk at that point, I'd imagine. But bears do feel like they're actually quite comfortable right here. And that is represented in the charts, which is a little bit very, very interesting. So again, I always want to step away from just the static interpretation of indicators, because any old monkey can do that. But to actually have an artful, look at how arrogant I am. But to actually, to be able to understand what's going on, the underlying, market dynamics over here, that's what's going to set you apart and going to give you a better understanding of what's likely happening. So in my opinion, what we're seeing over here is likely a rising wedge on the lower time frames. We're getting, if you're on your 4-hour chart over here, you're actually getting stonewalled by this 200 exponential, that purple line right there. And if we go over here to the daily and kind of really hash out this idea, we can actually find a lot more things. So first things first, I'm going to put on some horizontals, and we'll have some ideas to kind of go off of. This guy is kind of my next big area, and I do love how this horizontal is directly agreeing with the bottom support of this rising wedge right here. So that would be right around 6,500. Bulls cannot let price action on a daily close below 6,500, in my opinion. If you do close below 6,500, then I believe that you're in for some significant downside. Now, of course, it's not over till the fat lady sings. And where does the fat lady sing? Well, she's looking right here. She's looking right here at about 6,250. That really hasn't changed, in my opinion. However, if price action was to even just return to that level right there, I would interpret that as pretty damn bad in general. Yes, you'll probably bounce, maybe bounce a lot, maybe bounce a little bit. But overall, just coming back to revisit lows, typically in my experience, leads to lower lows. So that's what I'm looking at over here, and that's what I want to be aware of on the longer term time frames. Not only that, but just if I take off my trend lines and just look at the exponentials and simple moving averages that I have on the daily over here, I can see a lot of things that are incredibly indicative of an actual bear market. This is, by all intents and purposes, by all measurements, everything that I look for to denote a heavily bearish market. We have this red 200 simple moving average, which has essentially been your big bad resistance that's been curtailing price action for the last half year. It looks like all the way back here. It was former support, and then once Bitcoin broke it, it started becoming resistance, stopping that last movement at 8,300. Okay, fair enough. What else do we have? Well, I'm glad you asked. We're also living well below this 200 exponential moving average right here, that purple line. We also have on the daily time frame this yellow 21 exponential trending below that green 55 exponential, and not only that, but we're getting rejected from that green 55 exponential which tells me that, hey, perhaps the bots and the algos were being a little bit lenient in letting it get up there. Typically, you just want to see the 21 tested, but yes, it certainly can go to the 55. And if this does, if this does play out, and if they really do want to aggressively sell this, well, let me just divert your attention to over here the last time that we got this cross. Now, yes, this is a dirty example because there is also a death cross on price action over here, which we have not recovered from ever since. But the same sort of cross and price action going on over here, perhaps just a degree more powerful because of those higher exponentials relation to each other. The other one was right over here, which we were not death crossed at that point in time, and that led to a move from about 13,000 to 6,000. So again, things to be aware of. Also, we have our 30 simple moving average right here, that blue line, which is incredibly aggressively angled to the downside. The slope of your 30 simple moving average is incredibly powerful. It's probably the most important thing that I want to be aware of when I'm looking at the overall direction on the daily chart. And that, as you can see, actually coming in right at the same point at that green 55 exponential right there. Perhaps a little bit of a canary in the coal mine itself, saying, "Hey, not only do you have the green 55 over there, but now you're crossing a lower period below a higher period on a simple versus an exponential, which is even more powerful, right?" So yes, it looks like they're selling that as well. If I go over here and put on my 10 simple movement average, swapping my red 200 for the red 10 now this is a little bit interesting right here, because again, if I do put on my trend lines right here, that 10 simple movement average represented by this red line is actually lining up very perfectly with the bottom of this rising wedge support and also this horizontal support. So I'm going to take them back off, and that's coming in around 6,500 essentially. And yes, we are above that right now. However, I need to see it act as support if price action does get down there. Very, 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 very important. If the bulls lose that and we start closing below there, that's what I need to see. So I kind of struggled, is this a bullish point or a bearish point? Well, right now the 10 is crossed below the 21, of course, and the 22 on the simple. So you'd imagine that, all right, well, it's getting close. So it technically is bearish, but it is getting close. If I did put on the 10 simple as well, you'd see that is the 22 simple as well. You'd see that they're pretty much kissing right now. But if I do go off the yellow 21 exponential, which should be theoretically about the same, you can see that, hey, it might be one of those quick kisses and then say goodbye and good night. Okay, so we are initially finding support on the daily, around the daily 21 right now. We're about $30 under, but again, not a huge reason to panic. And while I am offering up different interpretations of this chart, the key point in any sort of this analysis is to be aware of the triggering points. So again, for the bulls, you start closing, higher time frames above 6,800. I think you very likely see that continuation to 72, 7,300, just like we saw that very quick move after closing above the 6,600 level right here to 6,800 right over here. Now we're coming back down, and we're going to figure out, okay, do we want to carry this onwards and upwards, or do we want to carry out some more downside? Now, of course, if this does play out to the downside, I want to be talking about a few ideas on the lower time frames over here. Now, this could also be interpreted as a bear flag. It's not your traditional bear flag. However, if we're just going to go off let's go off the rising wedge first, actually. So if we do go off the rising wedge right here, which would be the more, again, I really don't like using measure moves on these, but this would be suggesting a move back down to our prior lows around here, around 59.30ish area on Finex. If that were to play out, again, measure moves, not like a, it's not like a sure thing, but it gets you in the ballpark good enough. However, I do still believe that there is some merit to looking at this as some sort of a bear flag formation, like a variation of one. And if I go now over here and interpret this as a bear flag, and how would I kind of be drawing it as a bear flag? Well, I guess you'd have to go to the daily, actually. and you'd have to be something like this, and your bottom support would be something like this, and that does look like a bear flag, absolutely, and perhaps something more like this. There you go. Now it's looking like a bear flag. All right, I can deal with that. And we take the measure move and apply that to the prospective breakdown zone. Again, this is making a major assumption here. Major assumption. Well, that would be suggesting a move down here to about 4,200. All right, what else do we have down over here at 4,200? Well, you can see very easily that there's a beautiful horizontal just right in there. Let's make a nice pocket though, because as always, horizontals aren't just like a static line. It's more like a zone, right? And we got this area right here. Is that lining up? Oh, just beautiful, just beautiful. So down here we have a zone between about, what is this, 41 to 44.50-ish area. This zone is also of particular interest because there's a lot of volume being done over here. So that tells me, and I believe that was one of the times that, you know, China banned Bitcoin. So one of the times, you know, one of like the 10 times in the last 12 months. But what's most important about this is that we see the volume over here spike up huge on this dump down below this region, telling us that someone, you know, some big institution kind of stepped in and said, hey, we're putting in a floor for right here right now, and we ain't going lower. So this is, you know, historically relevant. If I put on my volume profile, I'm going to guess that it does agree with this, and look at that, baby. Oh, just look at that. So beautiful. And I probably sound like such like a nerdy, like single dad who gets excited about highways in America. And your volume profile is suggesting very, very similar action to what we were looking at on our horizontals. Not only if you break below this this bottom high volume node right here, there's very little holding you up in the midst of this area, but also the next big kind of area that you have an interest in, it would be right around here. The top of this node is around 44, and the bottom of it is actually at 37-ish hundred. So yeah, very, very interesting indeed. Well, what else can we find out? All right, so if we go now over here to the good old trusty stamp chart. Gotta love this stamp chart. I've been using this too. I've been abusing this one recently. Well, we have plenty of other things lining up over here as well. All right, this dotted trend line down here is the almost 10-year logarithmic trend line of Bitcoin. It's never been broken in Bitcoin's full history on Bitstamp, which is one of the longest running exchanges. And anytime that Bitcoin's ever touched it, it's never gone lower, essentially. So pretty damn powerful. Well, that would actually be coming up here and intersecting with this horizontal trend line that we put in at that 4,400 to 4,100 area right around here. Also, you have this logarithmic downtrend line intersecting all three of these right here. So we can actually see that there's a lot of interest, a lot of support built up around this region. Not only that, but if we do pull out and I do look at my fibs, that would also line up with your 786 Fibonacci retracement right around here from the ultimate high to the ultimate low of the last market cycle. And funnily enough, that is where we found initial support in 2014, bouncing along the ways on the first big down right here. Yes, we did ultimately bottom at the 886 Fibonacci retracement. You know what? I'll go over that idea as well. But you know, funnily enough, we have a lot of symmetry between these charts right here, right now. Not only that, but you do have your purple 200 weekly exponential going to start to like curl around into this blue box territory as well, also pointing towards that direction. What else do we have? Well, you do have this, if we do look at the percentage drawdown from the ultimate high to the ultimate, to the first low, that first big stab low before taking out this logarithmic trend line right here, it's very similar, right? We have 71.34%, 70 versus 70.17%. I'm probably like off because, you know, I'm a human and I can't do my mouse cursor that well, but you know, they are essentially very, 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 very similar. Well, if we do extrapolate this and bring it down to that first big stab down here, well, where that kind of, if we were to kind of just imagine price action somewhere right around here, okay, so again, putting us in the blue box, well, on that first big stab down, whoa, that's interesting, 78%, also your 786, also your 786, also all the same sorts of things. What about if so that's quite interesting for this idea right here. Now, of course, there are ideas that actually net us a little bit lower. I could show an idea that would kind of suggest that we go all the way down here into the into this blue box around 2600-ish area. Now again, I'm not suggesting that we're going down there for sure 100%. I'm just suggesting a technical analysis way that would that could be interpreted, as making sense in that direction if specific triggers are hit. So again, this is making a lot of assumptions here. I want to be extremely clear about this. I'm not trying to be Mr. FUD, not trying to be Mr. Asshole over here. Just trying to be Mr. Opportunities. And how do we do that? Well, we have to talk about all the different possibilities with this. And down here, well, we do have, if we were to go back to the daily over here, you could, I'm going to go to a fresh chart over here on Finex. You could interpret this right here as, if we do it right here, you could interpret this as a bear flag right here, absolutely massive bear flag that we put in over the last in the last like month or the last month and a half, and that measure move off of this guy, bringing my flagpole right over here. Come on, baby, there we go. And applying that to the breakdown area, which we actually do have confirmation of, and we are still respecting this area, which is also important. Well, that would be pointing us right down here. All right, well, that's 2,800. Okay, interestingly enough. Well, if I put in some horizontals right here, do we see anything else that lines up? Yes, we do. Yes, certainly we do. So going back on over here to the Bitstamp chart, well, you can see over here that would be, if we are making a blue box territory for this as well, putting in a nice little zone from the horizontals and the measure move. I don't have the measure move on this one right here right now because it's just it's going to be too convoluted. But just remember, it's also your 886 Fibonacci retracement. Well, what's the validity of that? Well, in 2014, where did we bottom out at actually? The actual bottom in 2014 was on the 886 Fibonacci retracement down here. What else do we have pointing towards that? Well, the red 200 simple moving average is actually going to likely curl around, hook around into this blue box territory as well. Also lining up maybe somewhere along this logarithmic trend line right here. Well, funnily enough, what happened in 2014? That is where we bottomed off of. We bounced off this first one over here that we just talked about, and then you found support along the intersection right here. Also your 886. And if we just do another little extrapolation right here, what would happen if we just kind of suggest that this is all the way down here? Well, funnily enough, another 86% move essentially on both sides. So again, we have a lot of things pointing towards both directions right now. I do believe that as long as you're below 6,800 in the way that we currently are respecting these areas and the way that we actually reacted off that first test of it is a little bit more indicative that could be what's happening here. So again, I'm going to readjust this readjust this guy right here for my 3 hour and just show that we have this this nice horizon wedge perhaps. And so at the end of the day, technical analysis is not about, crystal ball type thinking. It's not going to tell you, hey, this is happening no matter what, for sure, 100%. Whenever someone says that, like, guys, this is the low, no doubt about it, you always have to have, your cautionary lights on. It could be, it certainly could be, and I'm certainly will be looking for that day. And there could be a scenario actually where Bitcoin does not have that straight up capitulation that I think a lot of people are looking for, because there's a couple different ways to get capitulation, and one of those ways is to actually put in just a ton of time going sideways and frustrating everyone to death, essentially, to the point where they're just like, well, fuck this, I might as well just let go of my cones. So again, but that's they have to cause the same emotions, right? That's the key point. So you would have to imagine, you really have to do your time going sideways. I don't believe that is at this point in time. However, to kind of round up the more bullish scenario over here, as I don't believe I did it. I don't believe I talked about this, which I really do need to talk about. Going back on over here to GDAX. If you do break above 6,800, there's very little stopping you from that 7,200 to 7,300 region right here. And of course, where's your full on bull market? Well, if you start closing, dailies above this upper resistance trend line right here, that's going to be pretty convincing. That'll be pretty convincing. Sorry, let me get rid of this. But what's really going to be super convincing actually is if you start getting dailies closing above 10,000-ish area right here. It's really difficult to make an overall bullish case until you close dailies above 10,000. However, that we could be in the initial etchings of that. I do certainly accept that scenario as well. But again, there does seem to be a lot of signs and signals with the reaction of last night on what this could do. But at the end of the day, again, like I started this stream out with, or sorry, video out with, one of the most classic plays is to just rebuy this retest of the 21 exponential. We've seen what's happened before. Typically speaking, it's pretty damn good, and that's really all that I have to say about that. At the end of the day, we just have to wait and let it kind of populate these charts. Again, the big areas to be aware of, to wrap it up in a few sentences, is 6,800. As long as you're closing, as if you can close some higher level time frames above 6,800, then yes, very, very likely that you start making your way into the 7,000s. Perhaps even 76,000, 79,000 isn't too far off at that point as well. But by the same token, if you do take out this 6,500 region right here, it does call into question this whole action, and perhaps we do have to consider that the downside is a little bit more convincing at that point in time. However, again, the ultimate signal for the downside to be extremely abundantly clear is 6,250. As long as you're above 6,250, I do believe that you can make a case for both sides in the more immediate direction. And then even then, if you do break 260, I do believe that you will make your way towards those lower 5,000 to 4,000 numbers relatively fast. But again, you will have, you'll likely have bounces along the way. You're going to have support at 5,850. You're going to have support at, 5,000, nice round even number. All these sorts of things will kind of come into the equation. But for right now, I think that's going to do it for this week. And I look forward to seeing you guys on a stream a little bit later tonight. Until then, take care, and I wish you a happy, happy Goat Sunday.